Hello, Market Club members everywhere. Adam here, coming to you on the 6th day of June. So we have a 6 for the June, 6 for the day, and the 16 for the year. It's going to happen in approximately 20 days' time again, but then it won't happen until 2026. So it's a special day. Let's look at the markets. We're going to be looking at the 3 A's: Apple, Amazon, and Alphabet, formerly known as Google. And we'll be looking at each of these strong points, weak points, how it's changing, and potential trades. So let's get started right away. So we're looking at the stock of Apple, and it's interesting with Apple what's going on, because you had a situation where the stock was doing very, very well. You can see right here doing very, very well, and all of a sudden, bingo, it changed. Kind of a little double top here. We've got to be aware of those double tops, very important. And if we put our trade triangles in, you can see, let's just take that off. We put our trade triangles in, there we are. There's the signal to exit Apple, 104.88, and that's pretty close to where Carl Icahn got out of his stock. So we had the market comes all the way down just below 90, rallies back up, we get back in, I should say we get out of our short position at 95.90, and I think Warren Buffett got in right around these levels, if I'm not mistaken. So this was a, let's say, a Carl Icahn exit. So that was an exit, and this was a Warren Buffett entry. So that's how you have Apple. Now we've gone up. Now key things here. One is this level right here, and these tops around the 100, a little over the 100 level. But also look at the RSI, how it just stuck right to the, when it went over the line, it stuck right to that 50 line on the support line. If it comes below there, that's not going to be a good sign for Apple. And again, we said in the commentary, innovation is going to be the name of the game. If they want to have any big killer products. If they don't have that, then they've got a huge amount of cash which they can use. One of our members had a very eloquent summary of that, which I congratulate him on, did a great job. But also look at how the stock is going. It's really not, I don't think you should be in the stock. It's nothing to be excited about in my opinion. So let's move on. Okay, this is the juggernaut known as Amazon, and you can see it's sort of tweaking up to new highs. What's interesting, what I find interesting, who is left to buy the stock? Everyone's long Amazon. I mean, really, it's a plus 100 strong upward trend, trending higher. The one caveat here, the concern I have, and it's not a major one, but this is the high right here. And look at the momentum. The momentum isn't really following on the upside. And that's a little bit of a concern I have on this stock. Nonetheless, trend is your friend. The trend is clearly up, but be cautious, because if this thing starts turning around, a lot of people have made a lot of money in this stock, ourselves included. You don't want to be caught in the downdraft, because sometimes common sense goes out the window and you see a mass panic, and that can push stocks down, even really good stocks down dramatically. So be careful with Amazon, but we're very bullish on Amazon for the long term. And again, for the long term, because we think that Amazon is going to continue to strangle small business owners and kill the brick-and-mortar commerce stores. I just think it's going to be really brutal here in the next few years. Next stock is Alphabet, formerly known as Google, Goog, same symbol. But you can see this stock isn't exactly running away, and this is the concern I have. And we'll put in a Fibonacci retracement from the highs down to the lows. And you can see this hit exactly the 61.8% Fibonacci retracement, 739.29, and reversed. This to me is still a downtrend. Look at the downtrend triangle, longer term 673, and the market's at 719. So it's still above the original signal, but nonetheless, it looks to me as though it's going to be on the defensive. Their main revenue stream is from advertising, and that's getting challenged by Facebook and others in that space. So I think Alphabet has not had another success. They've tried other things. They're going to do Google cars. They're going to do this, this, and this. Google Glass was a complete bust, in my opinion. So watch the 50 line right here. If we close below the 50 line, that will be another sign that things aren't quite there in this stock. So again, remember, we've had strong stocks before. I remember when Yahoo was the darling of the internet, and look where that is today. So things do change. It's a very fast space. So remember to use stops, use money management, and watch the 50 line and watch our trade triangle. It's very, very important. Watch if this goes red, then you want to be short this stock. Okay, looking at the composite, you can see we're just battling against this. We've talked about this before, this sort of resistance zone right here, and we're still up there. And I think that's important to remember. If we fail from here, and again, if we fail, a lot's going to depend on Janet Yellen's going to be talking after I finish this video, so I don't know what she's going to say. But if they just determine to put interest rates up, it may actually be a sign that we'll see a pop down in the stocks. It's really on the edge right now either way, so let's see how that plays out. This is crude oil. Crude oil put in a big performance today. We're up 1.33% for the day, very close to the 50 line. Again, it's very strong. The trend is still positive. We had a signal today to be a buyer at 49.47. We're 49.70 right now. The market has turned up. We want to be long crude oil. We think it's probably going to bust through 50 on the upside this time. It's moved sideways for quite a while, so let's see how that plays out. This is gold. Gold has managed to put in a little bit of a performance today, 0.13%, nothing dramatic. It's still mixed. The weekly is down, indicating the trend is still down on the weekly, and the long term is still bullish. So we're looking for commodity to go sideways for a while, then eventually go much higher. We've showed you the key points to look at, and I'm going to show them to you again because I think they're incredibly important. I'll take all the triangles off, but the key level to really key in on is this level right here, and that's 1300. If you see the market go over 1300, just buy it because it's going to go a lot higher. And I think you can see this market easily go to the 15 or 1600 level in a short period of time. Remember, we've come a long way down from the close to $2,000 level that we saw. And if we put a Fibonacci number on there, we just go from the highs down to the very lows here. You can see a 1500 is a 50% correction. So that could definitely be a target level for you on the upside if it goes over 1300. So let's see how that plays out. This is the NASDAQ combined. We're going to go into like a 3-month chart. Let's put some candlestick charts on here. You get, again, the same similar pattern, right up against resistance. Watch that very carefully. S&P 500 very close. If it closes up here, it's going to be a new high close. It's going to look very, very good. But nonetheless, it has to drag everything else up. The high here on this day was 2,111. We're 2,109 right now, so we're just a little bit short of that. The high today was 2,110, so it's very close to the highs, but it could drop off at any moment, and I think if it drops off, you want to be very, very careful and cautious with this. Hey, this is Adam Hewison on the 6th day of June. Thanks for stopping by. I hope you enjoyed this video. Be sure to leave a comment. We'd like to hear from you, and have a great trading day, everyone. I'll see you soon.